A single unpaid property tax bill can trigger a lien that outranks your mortgage. So when Appalachian mountain men supposedly live tax-free on squatter logic alone, what actually happened to that land is the part no one tells you. Every property tax bill starts with the county assessor's estimate of what a piece of land would sell for on the open market, its fair market value. Assessors use recent sales of similar properties, called comparables, along with details like acreage, improvements, and location to set this number. Once the fair market value is established, the state applies a set percentage, often 60% in West Virginia, to calculate the assessed value. That assessed value, it is then multiplied by the local mill rate. 1 mill equals $1 of tax for every $1,000 of assessed value. So if a parcel is assessed at $50,000 and the mill rate is 20, the annual tax is $1,000. These calculations are published by county offices and are the same for every property, whether it is on a paved street or up a remote ridge. The final tax bill reflects both the property's value and the needs of the local budget. When the property tax bill arrives each year, it is more than just a notice. It is a deadline with real consequences. In West Virginia, bills typically go out in early September, with payment due by September 30th for the first installment. Miss that date, and interest starts to add up right away, at a rate of 9% per year, plus penalties. Over time, these charges can double the original amount owed. But the money collected is not just a line item on a budget spreadsheet. Property taxes fund the backbone of local life: public schools, county roads, police and fire departments, libraries, parks, and emergency medical services. Every dollar paid goes back into these essential services. When taxes go unpaid, it is not just a personal risk. Delays mean less funding for schools, slower road repairs, and stretched emergency response. That is why counties enforce deadlines and collect interest. Paying on time protects both your property and your community. For more clear, fact-based breakdowns like this, subscribe now. Every acre inside a county line, no matter how remote or unrecorded, falls under the legal reach of state and county taxing authority. The constitutions of West Virginia, Kentucky, Tennessee, and Virginia all spell out this blanket power, requiring assessors to list every parcel, whether it is marked by a deed, a fence, or just a line on an old survey. Courts have shot down every attempt to argue that land can slip through the cracks just because it was never mapped or formally recorded. State codes direct counties to assess all real and personal property located within the county. And county charters back that up by giving local officials the authority to enforce tax collection on any land, regardless of paperwork gaps. Even so-called orphan tracts, parcels with missing deeds or unclear boundaries, are brought onto the tax rolls once discovered. The moment a parcel is identified, the assessor issues a notice, creating what is called constructive notice, a formal declaration that the land is now on the county's radar and subject to tax, no matter how it was acquired or how long it was off the books. Once the tax bill goes unpaid, the county records a lien against the property. This lien takes priority over most other debts, even mortgages recorded after the tax bill became delinquent. In West Virginia, the tax lien stands just behind any federal tax claim, but outranks everything else. If the debt continues to grow, the county is required by law to publish notice of a tax sale, often in a local newspaper and on the property itself. After a set redemption period, usually 1 year from the date the tax deed is recorded, the property can be auctioned to the highest bidder. During this window, the original owner can still reclaim the land by paying all back taxes, interest, and fees. But once the deadline passes, the sale is final and any right to the property is lost, no matter how long the family has lived there. There are no secret exemptions. Every acre is subject to this process. Subscribe for more clear, fact-based breakdowns. Adverse possession is often held up as a supposed shortcut to land ownership, but the reality is far more complicated and rarely works as imagined. In West Virginia, Kentucky, Tennessee, and Virginia, the law sets out a strict list of hurdles. The claimant must occupy the land openly, continuously, and exclusively for a set number of years, often 10, 15, or even 20. But that's only the beginning. Courts require proof that property taxes were paid on the parcel throughout the entire statutory period. In practice, this means producing tax receipts or county ledger entries for every year claimed. Without this evidence, even decades of open use can collapse in court. The American Bar Association's guide calls the tax payment requirement an independent element, not a formality, but a deal breaker if missing. And before any title changes hands, the claimant must file a quiet title lawsuit, presenting all evidence for judicial review. Adverse possession is not a loophole. It's a narrow, uphill legal process that almost never results in tax-free land. Subscribe for more clear, fact-based breakdowns. Homeowners and landowners have real, lawful ways to lower their property tax bills. No loopholes or risky schemes required. The homestead exemption is the most widely available, taking $25,000 off the assessed value of a primary residence in West Virginia. Agricultural and forestry use assessments go even further, cutting the taxable value of qualifying land by up to 80% compared to market rates. Senior citizens, veterans, and people with disabilities may also qualify for reductions, with credits ranging from 10% to 30% of the assessed value. Conservation easements offer a 30% tax credit for land placed under permanent environmental protection. And if the assessor's value seems too high, every owner has the right to appeal. Just file within 30 days of notice. The county assessor's office is required to walk you through these programs and help you apply. For anyone serious about saving money, the assessor is your best ally. Subscribe for more fact-based, clear, and fact-based breakdowns. No land escapes property tax. Unpaid bills mean liens, then loss. No loopholes, just law. Real relief is legal, specific, and local. For facts, ask your assessor, not the internet. Subscribe for more straight answers.